So let's go. So now, you're all welcome. So this is the market outlook that we'll be having for this week. Market outlook that we'll be having for this week. Like you will know, I trade five pairs, which are USDJPY, gold, BTC, GBP USD, GBP JPY, and Euro USD. I think it's looking like six. Which one did I add? Okay, I added Euro USD. Sorry, Euro USD is supposed to be here. Yes, the five I do trade is GBP JPY, GBP USD, BTC, gold, and what? And USD JPY. Those are the five I do trade because I'm used to how they operate. Now me allowed you Adam. Yes, I remember that day. So because the reason why I stick to this five because I know how they move. And that was why I was shocked by gold just moving at only fair value gap last week. Do you understand? So I hope this week will be good. But this Euro USD is also like something like additional. So in case if I just see a particular setup that actually makes sense, and my body five I always focus are all these five. Do you understand? So first and foremost, we'll be looking at gold. We'll be looking at gold. And like I always say, doing analysis will make use of what? A top-down analysis, which means that doing your analysis from what? From the higher time frame towards to the lower time frame or to your entry time frame. Your entry time frame can be 1 hour, can be 2 hours, can be 30 minutes, can be 15 minutes, can be 5 minutes, can be 3 minutes. Do you understand? So that is what we call top-down analysis. Doing it from the higher time frame because what you will be seeing from the higher time frame, you will be seeing information, you'll be seeing structures that the market is actually doing. Do you understand that is doing in what on the higher time frame? Then what the lower time frame gives you, it gives you that internal information, like additional information as to what the higher time frame is giving you. And that's where I was always talking about internal market structure and external market structure. Your higher time frame gives you that external market structure. It gives you the overview of what the market is doing from daily to 4 hours to 2 hours. It gives you that overall movement of what the market is doing. But when you move down to 1 hour, 45 minutes, 15 minutes, 5 minutes, whatever minutes, do you understand, that are lower than 1 hour, it gives you more information as to what the market is doing on that day. So if you are a swing trader, I know taking trades on 15 minutes, 30 minutes will not actually be your thing. I was once a swing trader, so it's only 4 hours I take my trades. 4 hours. Do you understand? But if you are day traders, you always want to have that entry on your 30 minutes, 1 hour, 45 minutes, and there and so. So that's what we call top down analysis. So and when you go to the daily time frame, the first thing they are trying to check is what is the structure of the market. That's what you are trying to check, the structure of the market, so that as to know where the market is heading to. It is very, very important for you to know the structure of the market. And I've explained to before that when you are trying to identify the structure of the market, there are things that you need to what also play along with your break of structure, your change of character, your order block. Those three are very, very important when you are trying to what get the full information about what the structure of that particular of that particular pair. So when you check this gold, you can see it moving what upward, right? It's giving you a higher low, higher low. Do you understand? Start giving you this, make this the same equal low, right? So it gives this the same equal low. What does it mean again? It went up again, high, higher low, higher low, higher. You see it? So that's the first information that you want to get, you want to receive from the market on your daily time frame. First is what the market is moving, what is moving upward. Then I always tell people, before moving to 4 hours, move to weekly to check if the market is actually reacting to a previous level. Have you seen? There's no any previous level that the market is reacting to. So we know that okay, we are actually having more what information that the market will continue going up. Do you understand? So let's go back to our daily time frame. So you can see how we are doing what top down analysis. And I've already said it already that so as not to waste your time, you have to just what concentrate on structures that are actually what near to the current market price. You can see this is actually what near to what to the current market price. You don't need to extend it to all the way you are going to be getting information. No, just stick to this. Stick to this low. We have this low. This low can be so important for us. Stick to this low, and you see this high here. Stick to this high here. Do you understand? So let me erase that. That's number one information. So if you check this structure here, right, what are you having? You have your last break of structure here, right? There is a last what break of structure at this point here. You can see it. Then what else are we having again? We are having another break of structure to the upside, right? We are having another what break of structure to the upside. But before you do this, let me erase this. You see that when we have this break of structure here, right? When you come to this place, this break of structure here had a level here, right? But if you check, the level was not taken out. Do you understand? It was not what? It was not taken out. It actually matched this what this week here, which does not actually signifies that what that the structure was what having the structure is kind of having what market structure shift or change of character. So that's what you should actually that's what you should be looking at. It's very, very important. All those tiny details are very, very important. So what you will just do is if you look at this level here, market did not break this level, right? Market didn't break this level. So that means let us start from here, right? If you check here, there is a break of structure to the upside, right? There's another break of structure to the what? To the upside. And this break of structures, you will notice that their other block has actually been mitigated, right? Like I've already always tell you guys, after every break of structure, there is actually a demand zone that actually caused that break of structure. Please put that information at the back of your mind. After every break of structure, there is a demand zone that what demand or supply zone that actually what causes that break of structure. So when you are mapping out a break of structure, always make sure that you also map out the other block. Do you understand? I hope I said the right thing. After every break of structure, always map out the other block, be it a downward move or an upward move. Do you understand? So if you check here now, the other block of this break of structure has been mitigated by this movement. Can you see it? And the other block of this one has been mitigated, do you understand, by this movement. But when price got to this place, it didn't take this previous low, right? It did not what? It did not take this previous low. OB from the same time frame. Of course, whatever time frame that you are trying to adjust your OBs, do you understand? As we go down to the lower time frame, you will see it. You will just have to just keep on adjusting what those other blocks. It's very, very important because, like I've already explained before, when you have a market moves like this on daily time frame, this can actually be the information that you are getting on daily time frame, right? And this might actually be your other block on the daily time frame. But the funniest thing is that when you move down to 2 hours or 1 hour, this might actually be what you will be getting. This might actually be what you will be getting. Do you understand? This might actually be what you will be getting. But on 4 hours time frame, is showing you this. Now I made mention of an important information previously. I said when you are having a break of structure like this, right? You're having a break of structure. Don't forget that this first one here is actually what the 4 hour time frame, right? This one is what? The 4 hour time frame. And this, let me write it there. This one signifies what? A 4 hour time frame, right? And this one here signifies, let us say, 1 hour time frame. You can see that this is the information the daily time frame is giving you, but this is the information 1 hour time frame is giving you. And this other block that you wrote here, when you adjust it to your your 1 hour, right? This is where it will be. Do you understand? Let us say we have a small space here. So this small space here, this is the information that is giving you here. This little um space that you're having here, this is the information that you're having here. And like I always tell you, there are two things the market is always attracted to. It's attracted to what? Your liquidity and your fair value gap. Those two informations, the market is very, see, the market loves it so much because that is actually liquidity. That is where a lot of what orders are what are sitting on, those liquidity, because you have a lot of traders that trade demand and supply at the liquidity level. So because of you have that information at the back of your mind, that market is always what attracted to what? To liquidity and your fair value gap. So just know that if you also have another order block here, do you understand? Don't forget oh, these two are actually in what? On is they are actually in the zone of this order block which we have on this 4 hour time frame. Do you understand? That's why at times when you go down to lower time frame, you start getting confused. You'll be like, this order block is having two, this break of structure rather is having two or three other blocks. It is possible. Do you understand? But just know and be able to identify your order block very well. So you start asking question. If this first one has order block and this second one has order block, which one are you going to pick? Right? That's the question you start asking and you start getting confused. Don't confuse yourself. The information there is that what? That the market is attracted to two things: your liquidity, your fair value gap. When market sees it, market is always happy to feel it. Do you understand? So, and don't forget the normal structure of SMC. Do you understand? It's like is this way. Do you understand? So what are you expecting? You're expecting markets to what? To clear out this what? So this is your other block. So what market does is that this first pullback that you have there, do you understand? That's if you are having a valid order block and a fair value gap at this underneath here. Market will always come to take out this liquidity that you're having here. Do you understand? Now this is where I said majority of traders takes their what? Their demand zone. Do you understand? So what will happen is that when price comes to this level here, this liquidity here, price might actually react to it and start going up. And it might not actually react to it and start going all the way up. It might just go all the way up a little bit. Do you understand? And people will start placing orders again that okay, the price is going up. And what will happen? You will see what? A retracement back to clear out this liquidity. You see this fair value gap that you also have here. Market will try to fill it in. Do you understand? Have a fill and tap your order block and what? Move all the way what? Up. So you can see it. Now when you understand this movement here, now let us come to I'm coming, let me delete this. Now let us come to this 1 hour time frame that you're having. Then what will you be thinking? You'll be thinking, okay, if we have another block here, we have other block here, this other block here has fair value gap, this one has fair value gap. Because the market is always attracted to that fair value gap, right? And liquidity. So what will that one mean? It will mean that what? That means this level here will serve as what? Will serve as your liquidity. Do you understand? It will serve as what? As your liquidity. The fair value gap that you be having up here, market will be interested in it to feel it. But because of this place right here now is now your liquidity, right? Market will also what? Sweep it and what? And fill this second fair value gap you're having here. So if the market will want to respect only the fair value gap that you're having here and not respect the other block, market will just fill in that fair value gap without tapping the other block and start going up. And that's why for SMC we have different entry confirmation for different people. Do you understand? People some SMC traders take their trades on only fair value gap. Some take their trade on order block. I take my own trade from order block. So if market feel this place here and it is interested in my order block, it will tap the order block and what, and move all the way up. So have you seen how the 4 hours is looking like and how the 1 hour is looking like? The 4 hours is giving you that overall view of the structure of the market. But the 1 hour, the 45 minutes, 30 minutes, the 15 minutes will give you what? Extra what information, and which we call what? The internal market structure. Do you understand? The internal what? Market structure. So I hope with this little explanation now, you can actually understand when you are seeing like 2 or 3 other blocks in just one break of structure that you are having on the higher time frame, and when you zoom to the lower time frames, you are having up to like 2 or 3 other blocks. So just know it is the last order block with the fair value gap that will be your POI, because the other first up one that you have in market will be interested in it as your liquidity. So just know that. Do you understand? Know that and put it at the back of your mind. So if you understand what I explained there, then let us continue with the what? With the with the analysis. I'm coming. Let me delete all this. Let us continue with the analysis. So if this is you can check this last low here. Market did not what? Couldn't take the what? The this couldn't take this low out. Do you understand? It did not what? Take this low out. So that is actually one thing that we have in our what, at the back of our mind. And you all know your, what is the name, your chart pattern. You know when you have double top, double bottom, you know what it means. So let us go to 4 hour time frame and see what we are having. You can see what we are having here. You can see this break of structure. You can see what I'm saying now. Look at this movement here. On the daily time frame, it was not showing this movement here, but you see what 4 hours now is showing us. This is good. Let me put the watermark again for people to see. Let me put the watermark for people to see. So this is good. You can see on your daily time frame you are not having this confused movement, but on 4 hour time frame you are having this confused movement, or I call it more additional information. Do you understand now? So that is what I explained in that place. Now when you've done this break of structure, you've done this break of structure, right, and you can see where the market is doing, then look at it. I said internal market structure, abi? So we are seeing more information. Now if you realize we have last break of structure here, let me cancel this. You can see we have last break of structure here. You have what? You have your last break of structure at this point here. So know that if you have your last break of structure here, see there is no more any point that market breaks to the downside. This was the last point here. So this level here is what is your market structure shift, and I've explained what market structure shift, the difference between market structure shift and change of character. Some traders use change of character even if they see market structure shift. So it is whatever you want to use, you use. But what I explain about change of character is if there is a change in the structure you get, and if that change is gotten from what, a demand or a supply zone, that's when you use change of character. But market structure shift happens just naturally without what, without a demand or supply. Let me explain. If market is going to the upside this way, do you understand, and market starts to drop all the way like this, clear out this demand zone you have here, do you understand, and keep on moving this way. Now if you realize market was moving up at first, but it changes what, structure. Now assuming you have a previous level that has this what, that made this price to tap this supply zone that you have here, then what you'll be calling this level here is what, is change of what, is change of character. Do you understand? Is what is change of character. But assuming there was not any demand zone or supply zone, and price just change the structure after when it has given subsequent what, information that that price is actually what, is actually bullish, right? So this is what we call what, market structure shift. And at times that market structure shift just telling that just wait for the main time, because you might not have another block here. you might have another block here, and price will what? Continue what? In the previous movement. So that's what, but like I told you, some traders have a different concept. So it's whatever concept that work for you, you use. Do you understand? But I prefer differentiating what my market structure shift for my change of character. So now this is it. And I've told you, when doing market structure shift, after every change of character, market structure shift or break of structure, you identify what? Your order block. And this is the order block here, right? You identify what? You identify your order block. So if you are just coming here, you can check um my TikTok bio. You will see the YouTube link there. So this session that we're having here, I will actually upload it on YouTube. That will be maybe next tomorrow, I don't know, but I will upload it on YouTube. So you can go to the bio and subscribe and expect this session there. So and you can join the Telegram group as well. The community too is also down there. You can also join. So let's continue. So we have this order block at this level here, right? You can see that we have an order block here on the 4-hour time frame, right? But what happened? What happened? Price what mitigated this order block here. And what do we call mitigated? Means like price actually, as in it went towards to that POI, that is our POI was taken out. That's the meaning of what? Mitigation. Price what? Age what? The POI there. So this will not be interested. But the more you go into the lower time frame, you will keep on seeing more information if actually that price, if actually that order block was mitigated during the what? The lower time frame, that is our entry time frame. You will know. And if it is not, it will now actually be your what? Your point of what? Your point of interest. Don't forget. So now if we check this, what we've done is to what? Draw this our what? Our order block. So we are what? We are confident about this level here. Now let us see what market is still doing around this level. We've not considered what the market is doing here. So let us consider what the market is doing. So now we've picked this order block, right? And at this level, you can see the market is not actually going, is not breaking structure to the upside anymore, right? So what will you do is to what? Map out your what? Your market structure shifts. Map out what? Your what? Your market structure shift. Can you see it? After when market break this what? This level here, it did not continue that upward breakout, right? And what did it do? It continued what? Moving on to the other side to the extent that what? It broke this what? This level here, this low, this last low. Market broke that last low there. So what will you do is what? Identify what? The other block that actually caused this what? This market structure shift. That's what you are going to do. And the other block that actually caused this market structure shift, this is the other block coming. This is the other block. This is the other block that caused that market structure shift, right? That's the other block. You can see it. So if that is the case, we've gotten what we want to get on 4-hour time frame. We will move towards to the 2-hour time frame, right? You move towards you move to the 2 hours time frame. Now when you move to the 2 hours time frame, what will you do? You adjust it again, and I've told you guys how to identify your order block. That, like I said again, concept. There are some SMC trader that has a concept that their order block should be, if it is actually a bearish movement, they will say the last bullish candlestick before what? Before an impulse candle. But I myself stick to whatever candlestick, the last candlestick, be it a buy candlestick or a sell candlestick before what? An impulse candle. Now if you check, this is the last candlestick before this impulse candle. You can see this impulse candle. Do you understand? This is an impulse candle. So I use what? The last candlestick before what? Before an impulse candle. Like I said, different concepts, different beliefs. It just depends on you doing a lot of back tests and see what works best for you. Do you understand? That's why back test is very, very important. If you know that you are not comfortable with using the last candlestick, whatever, be it a bullish or a bearish candlestick, go and do a lot of back tests, and you can do, be it the sell candle before a bullish or the buy candlestick before the bearish, whatever. So if this is the case, right, now because of we are trying to do, if you see, we have your market structure shift here, but market is telling us more information here, and that's why I say we will do what? We will do internal what? Internal market structure. Let me expand this. If I expand this, what is happening here? You are seeing market moving to the upside, right? Now start mapping it out. This is your break of structure, right? That is your break of structure. This is another break of structure to the upside, right? This is another break of structure to the upside. Now let me show you guys something. You see that as we are mapping out this break of structure here, this internal market structure, this is actually structures that are actually inside just one break of structure on the higher time frame. Now, according to what I've explained before, have you seen? I said we won't pick this, we won't pick the, because market is attracted towards to your to your fair value gap and liquidity. Now, if we had picked this, now let us see if market actually respected it. Can you see it? Market respected that last order block with the fair value gap. And what the market did, market turned all these ones towards to liquidity. You can see it. Market kept on taking them out. See when it was came to this order block, and you can see the movement, even though it was a small move to the upside, but it's just telling you that in a break of structure that you have on the higher time frame, when you go down to lower time frames, you will realize that if you are having two or three break, if you check now in this place, we're having up to like how many break of structure? This is the second one, we're having another one again, this is the third one. Can you see it? You instead you will now be confused that which one should this is the fourth one. You can see you will now be confused, and that is why I said what, and that's why I said always use the one that is what, that is the last, that's inside that what break of structure that you got at what, at the higher time frame. So this is this, right? We are erasing this. So let me go back to the internal market structure that we are actually doing. So when you come here again, this is the last break of structure that you're having. This is the last break of structure. Let me erase this, so there's no need for this again. So when market came to this place, what the market did, market broke this to the upside, right? And there is no any other further break of structure. If you look at this, market did not break this, market just is at the same level, right? Market didn't break it. So what will happen, let me cancel this. What will happen, this will now be your what, your market structure shift. This will be your market structure shift. Can you see it? So if this is now your market structure shift based on what, don't forget, based on internal market structure that we are doing, right? So if this is now your break of your market structure shift, what will be this? This will be what, your break of structure, that is market kept on what, breaking structure towards the what, to the downside, right? What will be this again? So let's cancel this one, this larger one. This will be your what, your break of structure again to the what, to the downside, right? This will be your break of structure towards to the downside. Now if you see, this is the last break of structure to the downside. That is what we are seeing on 2 hour time frame. Please work with what you are seeing on the market. Don't think for the market. Whatever the market is showing you on 2 hour time frame, work with it. But if the market is showing you more information on 1 hour time frame, work with it. Do you understand? So that is how you do your analysis, so that you will not start getting confused. So this is what we are seeing on 2 hour time frame. This is the last break of structure. Do you understand? You can't call this a break of structure, because these are just this last week here, you get, is in line with this week. But when you go to lower time frame, this week might actually be a full candle, but work with what you are having on what, on 2 hour time frame, so as not to what, get confused, right? So if you check this last break of structure that we are having, right? So let us go to what, let us go to 1 hour. But before we go to 1 hour, map this as what, Map this as your liquidity. This will be your liquidity level. You can see it. This will be what? Your liquidity level, right? On what? On 2 hours. Then let us move to what? 1 hour. Let us see more information. What market is trying to give us. Let us see more information. Market is trying to give us. You can see it here. Let's move to 1 hour again to see if price actually breaks this. So this is this. Let's move to 30 minutes. You can see it on 30 minutes right now. You can see that on 30 minutes we're actually seeing this last break of structure again on 30-minute time frame. This last break of structure. So now what we are doing here is actually going to tell us, if it's going to give us more bias, if actually this market is actually on a bullish or what, or we are going to enter sales. That's why I said top down analysis. You do your analysis from the daily time frame to your entry time frame. So whatever information or conclusion that you arrived at your daily time frame with, at your entry time frame, will be what you will go with, right? Now after this break of structure here, what the market did here, market had what? Market had market structure shift here, or some people call it change of character, like I said. Do you understand? Now market kept on what? Breaking structure to the upside. So you can see how I'm getting all this information from the what? From the daily time frame. I'm not just picking any information for myself. Now what the market did again, break structure all the way to the what? To the upside, right? And if we check this level here, what the market did here again, market had what? Another market structure shift, right? To the downside. So are you seeing it now? It's having what? Another market structure shift to what? To the downside. This is on what? 30 minutes time frame. Don't forget that we still have this our other block here. We are not erasing it. Let us leave it there. So if market has this market structure shift, right? So what are we to do again? We want to see what is happening here. So this market structure shift, map out your order block that causes this market structure shift, which is this. Don't forget the information I said. I said the how you identify your order block is what is the last that's for my own concept, is the what is the last candle, be it your bullish or bearish candlestick, before what? An impulse candle. You can see this blue candle here. This is the last candle before this impulse candle. Do you understand? This one here, you see, this can also be, but you can see it was mitigated very well on 30 minutes. So when we move to 15 minutes and we see if it is not mitigated, we'll actually also put it as what as we'll put it into consideration. But for now, what we are seeing, this massive impulse candle is this. But on 30 minutes, it was mitigated, right? But 30 minutes is not my entry time frame. So we'll go to what 15 minutes to see if it was actually what mitigated on 15 minutes. Now you can see it. This is where it is right now. Here, this is the last candlestick before this what impulse candle on what on the 15 minutes. Do you understand now? So after when you've gotten that information, right? And I think I sent this signal on Friday, but it was not mitigated yet. Do you understand? It was not mitigated. But because of this market structure shifts, this is what we'll be expecting. Like I said, don't take any trade. Let market open. Let market have that breathing space. This would be what? Your liquidity, right? This would be what? This would be your liquidity. Then this would be our what? Our PY. Then where we'll be targeting? We'll be targeting this last low. Can you see it? We'll be targeting what? We'll be targeting this last low, right? You can see it. We'll be targeting that last low. That's where we'll actually be what? Be targeting. But let us see what market did here. During the NFP, I gave a setup here for this buy. During the Yes, this was still our trade setup. So during the NFP, I gave this setup here. You understand? Excuse me, guy, I'm coming. So sorry. So the thing is, during the NFP, I gave this setup here that went for a buy, right? It went for a buy though. So what are we looking at here? Let's look at it from there. So that means what we're thinking is that market might not actually get to this point, right? So if this was actually and we got it from what, the 5 minute time frame during NFP news, you can see it. We got it from what, from 5 minutes time frame during NFP news. So let us go back to our 15 minute time frame, that's our entry time frame, to see if we are actually still going to enter this buy or what, or sell. Don't forget that we have, on 1 hour time frame, we had this other block here that actually looks legit. Do you understand? That actually looks legit. But for here, we can see that we have a level here. So let's map this one out. Let's map this what is the name? Break of structure. No, are we going to call it, no, let's call it market. Okay, yeah, change of character. Yeah. Because it's reacted from this other block here. We have another block here. You can see it. We have this other block here. Let me show it to you. We have this other block here. You can see it. And what the market did, market reacted to what? To that other block. So that is also giving us what? More confirmation that what, that we might be going to the upside, right? And if we do, let us come back here again to do what? Internal market structure. So as to know that this information, we want to know what this information is all about. That's why you must always do your internal market structure, so as not to just get confused and taking the wrong decision. So if market break up to the upside to this place, break of structure, right? What the market did here again, market did another break of structure to the upside. Then let's cancel this bigger one here. What the market did again, market did another what, break of structure, right? To the what? To the upside. Then this is where market starts what, to change what, character, right? This is it, your market structure shifts, right? To this down part again. What did it has here? Your market structure shifts. So this is, yeah, I say market structure, sorry, break of structure. So this is the last break of structure that we have here, right? This is the last one. This is the last break of structure that we have here. But we can't call it, we can't, that means, have you seen that why I say we need the internal market structure? That means we can't call this what, a change of character. Do you understand? This is actually just what, just pull back. This is actually what, pull back. Have you seen that I had to go and do that internal market structure to know exactly what this one is all about? If this is the last break of structure, if you can check, this one here has not been taken out, this level here, because this is the last low for what, from this break of structure, right? This is the last low here. So it was not taken out for us to now say, okay, we want to start going bullish. And if you check, it was not taken out at all in this area. So let us cancel that what, that level there. So this still stand. That means our sell what, our sell bias still what, still stands. And so have you seen what I did there? Do you understand? Have you seen what I did there? I actually did what, that internal market structure to actually what, get that particular what, that particular information, so as to know. Because some people would actually get mistaken and what, take their buyers here. And let us say market came back to this entry here and go all the way down. And some people have a buy set up here. Do you understand? They might actually be taken out, which I'm coming. Let me remove the person. So they might actually be taken out if They actually don't know that okay, there was not a buy set up around that side. So that's why it's very, very important that you know all this information. It's very, very important that you know all this information. So that means the sell setup that we actually placed on Friday is still is still active. And I've told you people how to place your stop loss, the last low, right, under this other block. We have some traders that their own concept is like this, but I don't like putting mine around. Okay, let me show you guys. I don't like putting mine around this side. I like to put it at this last low here. Do you understand? So all the way to, let me cancel this. So all the way to what this last low here, all the way to all the way to that last low there. Now what week's reward, 1 to 4 weeks reward. So don't forget, I gave at the beginning of the um session, I said a particular information. I said if I gave a particular I said based on back test, gold actually respected what is the name? Gold actually respected fair value gap 55% of the time, then other block 45% of the time. But I prefer to take my own trades from the other block. So if you know that you prefer to take your own from the fair value gap, then since we have inducements here, do you understand? You can actually take it to the level of of the fair value gap. You understand? But this is what we'll be having now. So we are not taking any trade for now. Do you understand? We're not taking any trade for now. We'll wait for the market to open, because we don't control the market. So because market can open and have this immediate spike up to this upside here. Do you understand? And take out this other block that we have here. So that's why you should not just rush and take trades. Let market breathe. When market is just opening, let it breathe and let it do what it wants to do. Know the pair that you'll be trading during London and New York session. Know what time you'll be doing all this. So all these things, all this, that's why Forex is more than you just taking buy yourselves. There are a lot of things that surrounds Forex that you must actually master. Must actually master when the market will always have volatility, always know when market will actually have not no volatility. Know if you look at it, if it is 430, this particular pair does not actually have high volatility again. Is it that we should go out of the trade? All those informations are very, very important. So you can see that Forex is more than just taking buys or sells. Do you understand? So that's because some people will actually take this right now. They will go and put buy sell limit here, and when market open, market might actually just go with high spike and take this level out. Do you understand? So let's just calm down. Let me go to 45-minute thing so as to just shrink the chart and show you what we are actually having. So you can see it. We are having this continuous market structure shift. Do you understand? To the downside. So let's see if after my price open, if this is what it will actually give us, we will know. But I remember that I gave this setup on Friday, but market, you can see market did not tap this our other block before it continued going to the downside. And some people can say it reacted to fair value gap here again. So like I've already said it already, if you know you want to be taking your trade from fair value gap, if I give any trade coordinates in the group, just what will you do? If you have confidence in taking yours from the fair value gap, you can adjust your entry to fair value gap. But I takes mine from from the other block. So that's that about that for gold. Let us go to your USDJPY. Let us go to USDJPY. Let me clean this chart. So I won't be talking much here again because I've already explained how the top down analysis is on gold, right? So here now on USDPY, we will just be doing straight to the point. Do you understand? I won't be talking too much here again. So if you check this level here, we have this market structure here. It's pointing all the way to the downside. But what has been happening here, market has actually been ranging around this level here. Do you understand? Market has been ranging around this level here. So that information is also important. Have that information as well. market has been ranging around this level, and I think I did not trade USDJPY at all, only doing the NFP, and I think we lost the trade. But I gave two trade during NFP, USDJPY and gold. The gold was full TP, 1 to 4 weeks reward, and USDJPY was a loss. So, but market has been ranging around this place, sha. So what will you do? Since we are not really having a complete information as to what the market is doing here on daily time frame, you can see that we cannot see a lot of break of structure or whatever. We cannot really see completely what market is doing here. Do you understand? So what you will do, just go to 4 hour time frame and let us see a complete picture of what the market is doing. Now, when I said trade little pairs, less pairs, so that you actually have a full understanding on what those currencies are doing. I remember that we have a break of structure around here. I remember we had a break of structure around here. Do you understand? Because of what? We had this last break of structure here. We had this what? We had this last break of structure here, and we had what? A change of character here. A change of what? A change of character. Right? And why is it change of character? Market was reacted to this other block here. Can you see it? Reacted to this other block here and continue going what? Continue going out to the upside, right? That's why the change of what? Change of character. So when market did this change of character here, what did it do again? The market came all the way here, tap this other block here, then continue going up, right? So what does it mean? So market continue up the way to the upside. That's what it means. So work with that. Market continue again up to the what? To the upside. Market continues again to the what? To the upside. Let us cancel this other block here because it's not even relevant again. It's no more relevant. So what are we doing now? If you check, this was the last. Okay, we still have another break of structure to the upside. We still have this last break of structure towards to the upside. As you can see, there is no more any break of structure anymore, right? Break of structure has been has ended already, right? This is the last break of structure that we have here. So what will that mean? Means for price now to take this last low of this break of structure, what will you call it? That's your what? That's your market structure shift. That's your market structure shift, right? We have another what? Break of structure to the what? To the downside. We have another break of structure towards to the downside, right? We have this break of structure again towards to the downside. Break of structure towards to the downside. That's the last break of structure. But if you check this break of structure to the downside, right, on 4 hour time frame, the high of that break of structure was actually taken out by this candle, by this impulse candle. So that's why I will call this what? Change of character. Right? Can you see it? It was taken out by what? By this last candlestick here. So what does it tells us? It just tells us that what? Okay, that they might actually want to be what? A change of what? A change of character. But that's not what we are going with right now, because we are still going to what? Our entry time frame, which is the 15-minute time frame. So this is all the information that we've gotten. So what will you do? You map out what? You map out your other blocks. We have this other block here, right? We have this other. I'm seeing another block here. Are you seeing it now? I'm seeing these two other blocks here, right? Let's just leave that for now. Let us go to our 2 hour time frame. So if we go to our 2 hour time frame, you can see it that we have this last break of structure at this point here. But what happened? On 2 hour time frame, we can see another break of structure to the downside. Right? We can see another break of structure towards to the downside. Right? So if you see this break of structure to the downside, adjust it. Right? We can see after this break of structure, We can see what's a market structure shift here, right, to the upside. We can see another break of structure to the upside, right? So if you can see this, that means we have this break of structure here, other block here, right, other block here. Let's cancel this. Let's erase this. So this level here on 2 hour time frame will be what will be our point of liquidity. You can do it like this, and I've taught you guys there are various ways of liquidity. You have one of trend. It can also be this way. Do you understand? Anyhow you want to um identify your liquidity. They can be done in different. We have the one of trend line, we have the one of support and resistance. Do you understand? So now that's the information that we're going with, right? Let's go to what our 1 hour time frame. Okay, let me take this one away. Let's go to our 1 hour time frame and see what is actually going on 1 hour time frame. Let me take this out. So on 1 hour time frame, you can see this. Let's move again. So there's nothing much again. So let's go to 45 minutes time frame. So on 45 minutes time frame, we'll adjust this, right? People will say it has been mitigated, right? But let us still go to the lower time. Big Josh, King Josh rather, thank you for the gift. Thank you for the gift. So let's go to 30 minutes time frame. Let's go to 30-minute time frame. This is 30 minutes time frame. We can still see this, right? Now it's 30 minutes time frame. This is still our liquidity, right? This is still our liquidity on 30 minutes time frame. Let's go to 15 to see if there is any other block on this 15-minute time frame. Do you understand? Let's go. This is this one here. This is another break of structure down here. But I'm seeing something here. I'm seeing, let's cancel this liquidity first. You can see this pullback. There is a pullback after that break of structure. This is the pullback here. Do you understand? Which can also serve as what? As our liquidity. You can see it. There is a pullback here, which actually serve as what? We can also serve as our liquidity. Right now, there is another block here. There's another block here, right? So this level here as well can also serve as what? As our liquidity. That's why you must be careful when choosing the one that you will use. You must be very careful. And if you check, there is actually a fair value gap around this level here. There is a fair value gap right around this level here. You can see it. There's a fair value gap around this level here. So the question is, which other block are we going to use? Are we going to use this and are we going to use this? Now, because of our confirmation, our confluences, we said what we are going to make that's when if liquidity is present and fair value gap is present. But if we check at this first one here, everything is present. Do you understand? This liquidity here is present, liquidity here too is present. So that means we will make use of what? This first one here. Do you understand? We will make use of what? This first one. And what is giving me that information is because of we have a liquidity here. Assuming I don't have any liquidity here, this will actually be my point of liquidity. Which even if market does not want to respect this other block, market can still see this as liquidity and take us out. But we are operating as what we are seeing and our confirmation. Does not mean every setup that you take is 100% right, but the reason why you are taking it needs to be there. Do you understand? I've identified this. You can see markets reacting to this liquidity. When it came all the way down here, it went up back again. So it's showing you that that point is actually the liquidity. You can see it. So it's just expect market to come back down to that level, then expect for a buy to the upside. That's what we'll be expecting. So I will have to see how market is reacting before I call the trade on the Telegram group. So that's what we are having for the USDJPY. Do you understand? That's what we are having for the USDJPY. So the reason why I'm going to do this gold and USDJPY now is because when market opens, those two pairs and GBP those two pairs always move with high volatility. Do you understand? But when it comes to this GBP USD, your Euro USD, your other pairs that move very well when it comes to London time frame, New York time frame, do you understand? It's best to do it when that time frame is about to open. Do you understand? But for now, I will just be showing you guys just this gold and this gold and USDJPY. Do you understand? Because we don't have much time. So I'll be showing you guys just what this. So I hope you guys understand how this top-down analysis is actually, as in how I did this top-down analysis. If you don't understand, comment. If you don't understand, let me know. Like I said again, if you don't understand, comment and let me know.